All right, welcome back to Wise Guys, Wise Talk, Ep.6. And so looking forward to having some good back and forth. So I wanted to start off with, I think, a very important subject matter that we will definitely need to address now or pretty soon. It's going to have to do with quantitative easing. And it's going to eventually spill over into the mainstream economy, causing inflation at some point where we're going to have to address that. So I want to touch on that today.
Yeah, I've got some fresh stuff just because I just did a couple videos on this over the past week. I don't know if you guys saw the report from Zoltan Pozsar, who's the big guy with Credit Suisse. And his whole report is about 11 pages. Basically said that the Fed is going to have to do actual QE the way they would define QE, which is the difference between buying T-bills and actually bonds or treasuries. He said they're going to have to do that by the end of the year because of all these increased demands for the dollar because of regulation like GSIB and because of like the FX swap market. I won't go into great detail, but the bottom line is there's going to be a ton of demand that the Fed is not expecting, and they're going to get blindsided by this. And I thought it was very interesting that his report came out on the 9th, December 9th. And I don't know if you guys have ever gone to the New York Fed, but they've got the repo page. They actually changed that. They modified it to doing more QE. So you've got the Fed, which is the by far the most powerful central bank in the entire world. And they're so far behind the curve that they're basically taking their cues from some guy's blog post.
To George's point that we allegedly have this great economy going. The treasury debt, of course, is an all-time high. It keeps getting added to every year with new, not big deficits, but trillion-dollar deficits. Problem for me with when people talk about a trillion, they don't ask about the magnitude of a trillion. For example, to put this in understandable units, if you were to live 1 trillion seconds, 1 trillion seconds, snap of a finger, you'd live to be 31,709 years.
Yeah, right.
That's 1 trillion.
Right.
If you could walk 1 trillion inches because you want to get some exercise, and George, you look pretty fit, so you might want to try to walk 1 trillion inches. There you go.
Mike and I are both boxing right now, baby.
All you'd have to do is walk around the earth 633 times at the equator to walk 1 trillion inches. That is the magnitude of 1 trillion. And if you believe Lawrence Kotlikoff, who I think Boston economist, in 2012, he did a present value analysis. I don't know how he did the calculation, but I'll take him that he did it right. I don't know what his discount rate was, but he estimated in 2012 that the unfunded liabilities of Social Security was over 200 trillion.
Right.
Okay. We got to fix, I mean, regardless of what happens, we got to change the system.
Now watch this. Between now and the end of 2020, the chance of us directly having the chance to change anything is not likely. So it's more so, how do you brace for a crash landing? Like Ben would say, always, where the ship is going to hit the iceberg flat out. We know that. So between now and the end of 2020, I anticipate some emergency type of measures officially being announced, give or take some type of event that could happen outside of our country that could force the Fed to have to crank it up more and officially announce quantitative easing. Because if they were to announce that they are going back towards direct emergency measures, that's pretty much you're going to break the camel's back, and that's all she wrote. So at that point, what do we do? Like what's the ideal strategies, knowing that they're about to flood? They're going to flood the planet with as much liquidity as possible. What should your average person who works a 9 to 5, who has a savings account, a retirement account, what should they do?
Yeah, I can answer that, but at least in my opinion, this is my opinion for what it's worth. First and foremost, gold coins. That's your insurance policy. A lot of people go nuts and, I want 100%. I'm just going to sell everything and go into gold. I don't really suggest that because it doesn't pay you to own it. What I like instead of that is going and I think the average Joe, the very first thing they can do is make sure if they own a home, I don't care where it is, that their mortgage is fixed rate. And then you're getting paid to short the dollar.
Now, George, watch this. Let me throw a little wrinkle at you. If we reach a systemic global contagion like the world's never seen, the banking sector goes under. Therefore, they're sitting on trillions upon trillions worth of so-called real estate, and they
Right.
is there any chance they call in some debt
to get food? This is terrible. This is something they never wanted. They'd work all day for a plate of food.
Times are different now.
Yeah.
That was before food stamps, welfare, Section 8 housing. You got a large chunk of the population that's only too happy to sponge off the rest of us.
Agreed. And this becomes the issue. When you're used to having handouts and there are no more handouts, what happens?